Today's top three things is number one, the U.S. dollar. I could say number 1, 2, and 3 are U.S. dollar and interest rates, but number 1 is the dollar, number 2, the 10-year bond yield, and number 3, the price of gold. So number 1, the dollar is what it is. It just made a higher all-time low versus the 40-year low that was established through no tapering. So again, you have to be intellectually honest about this. Obviously, this is bullish for the dollar. It was intraday, and it was into the close, and it is right now. So again, the dollar is up to 80.54, and the question is, can it get back above its intermediate-term trend line of resistance, which is 81.14? If it can, and bond yields break out above 3%, giddy up. Giddy up. I mean, that's what's going to happen. What else are you going to do? There is a torrential flow of bonds in terms of people being long of bonds, long of gold, and not long of equities. You know the flow call. We gave it to you. So, again, there are emerging outflows associated with that, by the way, too. You'll note that this morning markets like Turkey and India are not up because emerging markets don't like rates rising and the dollar going up. So, again, let's just hit on 10-year bond yield. 2.92%, hitting its highest level in a couple weeks here. Again, banging the top end of the range. So don't get all, freaked out and stuff. Just look at it for what it is. The dollar's up and rates are rising. This, you know what to do with this, or at least people who have been observing the gold market throughout the year know specifically what to do with this. And again, just to hit on the levels on the 10-year bond yield, the 10-year bond yield is in a bullish formation. That has not changed. The question is, can the 10-year bond yield break out above the bad decision of no taper in September? Can it get above that level? If it can, again, it's called reflexivity. Markets are going to perpetuate the outflows in the bond market and the inflows into the equity market, which is precisely why the equity market can keep going higher. Finally, gold. Gold is crashing, just FYI. That's been going on for quite some time. This happened in 1982. It's happening right now. Again, what is the enemy of gold? It's rates rising. You can see that quite coherently this morning. So am I buying gold because it's down? No. I made enough mistakes this week. No, I'm not going to do that. Those are your top three things.